This video shows backtesting for the last 30 years on 4% rule with funds invested in S&P index and Vanguard total bond funds. My hypothesis is to have 5 years of expected withdrawals in bonds may be sufficient to ride out the stock market volatility. Rest can be invested in stocks to maximize the returns. Historically, stocks return 8% and bonds around 3.85%. Initial assumptions are inflation at 3%, starting stock funds value at 1.43 million and bond funds at 370K. Starting withdrawal amount is $72,000. 1.8 million multiplied by 4% is $72,000. All the withdrawals will happen from bond funds to account for spending, and every year stocks return more than 4%, bond funds will be replenished from stock funds. In order to have 5 years worth of withdrawals or to be withdrawn amount always available in bond funds. This amount will be at 1.25 times that year's withdrawal amount. We will be using last 30 years of actual returns from S&P and Vanguard total bonds for this backtesting. So we'll be using stocks and bond returns from 1994 to 2023. Year 1 starts with 1.43 million in stocks, 370K in bonds, and ends with a return of 0.4% for stocks, stock total reaching to 1.43 million. Yearly withdrawal is at 72,000. Deposit to bond fund from stocks is $0. Bond funds return negative 2.66, taking the total bond fund value to 288K. Year 2 starts with $1.34 million in stocks after accounting for bond fund deposit from stocks at $92,000. Stocks return 38%, taking the total stock value to 1.85 million. Yearly withdrawal is 74,000. Bonds return 18%, taking the total bond fund after considering the 74,000 withdrawal to 359K. Year 3 stock starts with 1.75 million. After considering the deposit to bond funds at 95,000, they return 22%, taking the total amount to $2.1 million. Bond funds return 3.58%, taking the total bond fund value to 391K. Continuing on like that, there are 3 consecutive years S&P returned negative percentages, taking the total stock value to from 397 or $3.97 million to $2.48 million. During those years, there are no deposits from stocks to bonds. Bonds returned 11.3, 8.4, 8.2 in those years. Bond fund value, total value went to $396,000 with considering all of the withdrawals happening from bond funds with no deposits from stocks. Continuing on like that, during a year, stocks return only 1.8%, no deposit from stocks to bonds. After year 30, the total stock value remained at $10 million with yearly withdrawal amount at 169,000 and bond fund value around 590K. This backtesting validates that having only 5 years worth of to be withdrawn amount in bond funds at any given time may be sufficient to ride out the stock market volatility and increase the total returns. Please note that I am not a financial advisor. Please do your analysis before taking any actions based on the info presented in this video. This video is for entertainment purposes only.